Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. Today I'm joined by Tai Wong, who is an independent proprietary trader. Good morning, and thank you so much for joining me here.
Good morning, Remy. You know, we've had so many sunny days. It's hard to believe that we finally have a rainy day, and that's supposed to rain for a few days. But nevertheless, it's great to be here.
Well, I'm glad you're joining me because today is the day after NVIDIA earnings, so we'll be taking a deep dive into that. But I know we start every session by looking at the markets and talking about what today is. So what is today?
So a couple of interesting things today. It's the Great American Smokeout. Apparently, it began in 1970. And we still have about 38 million Americans who still smoke tobacco, and it's apparently responsible for one in five deaths every year. So probably worthwhile to continue the tradition of telling people that you can smoke and it's a free country, but there are some very substantial harms that come from it. And it is also Voltaire's birthday, the great French philosopher and thinker. He lived a long time for the 18th century. I think he died at 83, and he was a great champion of freedom of speech. He campaigned against the excesses of the Catholic Church and was considered sort of the leading muse of eventually the French Revolution, which I think went a lot wilder than he ever would have wanted it to. But he was a very well-written man, very funny man. One of the things he is alleged to have said was on his deathbed, a priest asked him to renounce Satan, and he said, "My man, this is not the time to make enemies." He was also something of a romantic, and I love this line, and even my wife giggled, and when I told her, he goes, "I'd love to lie at your feet and die in your arms." I'm like, wow, that's a great line. I mean, if someone said that to you, Remy, how would you feel?
Well, that's very interesting because when you think about it, we're here at the New York Stock Exchange and you don't hear too much Voltaire quoted
No.
here. So I think that might be the first
Surely
time
not.
that I have actually heard that here. And while we're here the day after NVIDIA, I don't know if you went to any watch parties, but I think a lot of us were glued to our screens just waiting for those results to come out.
I had my Doritos and my coffee in front of my screen, watching a live blog of it.
Oh, really?
Yeah. So they beat on earnings. They beat on revenue. Outlook was pretty good. And they said our problem with our Blackwell chips it's going to be constrained by demand rather than supply for several quarters, probably all of 2025, and they're still getting orders for the Ultra. I think it's Hopper or whatever. I forget the name of the chip off the top of my head, but it's really a great report. Their revenue has doubled in a year, and the market is so spoiled. They're like, meh, meh. Went down a little, went back up a little, went down a little. Actually, I think hit a new high on the open day, and now where are we? It's chopping around a little bit. Trading about, I guess, down 1% or so. I think the outlook for the stock is, I think, very good. As AI seems to continue its path and that investment continues. Now, there is some concerns that a lot of their demand really is coming from a couple of names, a couple of the other Mag 7s who are buying a ton of their chips. So it is if that slows down, you could certainly see the stock backing off a little bit, but you really couldn't ask for too much more. So I do expect the stock to continue to go higher, but from the chart and from the momentum that we see today, unless we get a strong close, say above 150, I think we might need a little bit of a retracement, maybe down to the 125 and 130-ish region. It just feels like we need to back off for a few days, let it consolidate before it goes up again.
Yeah, I think you bring up an important point there because when we saw the actual results start rolling in, and we're talking about some lofty expectations, you heard commentators talk about how they might have missed the loftiest of expectations. And when we're talking about the results for the top and bottom line, they're quite expansive, aren't they?
Right, they're great. I mean, you really couldn't do very much better. But the market has gotten, with this name, has gotten so spoiled. I think at some stage, maybe around the 2010, 2011 time frame. I'm trying to think when, I would get out of the train at Grand Central, and there was lines outside the doors of Grand Central a lot of actually elderly Asian people who were, I think, buying it, and somebody paid them to stand in line, buy it, and then they would ship it to China or ship it elsewhere. It's been a long time since we've seen those kind of lines, and I think at that stage, Apple, the expectations were so high that they really did blow the doors off. It was a little problem for the stock. Nvidia might be there right now. The market is just too small.
Yeah, that makes you think about the companies that have grown, especially within the Mag 7 names and where they have come, because NVIDIA, as you mentioned, their market cap is quite expansive, and we know that there are expectations for growth in the current quarter as well. So as we head into the year end, we'll have to keep an eye on prices where we go. I do want to mention that something else that we're paying attention to this morning, in addition to our market check, is crypto, because Bitcoin did tear through that 98,000 level to hit new all-time high. So we'll keep on watching that today.
It did, and apparently we were talking on the show yesterday with Sean Farrell, who's head of crypto research at FundsTrend. He said we were talking about how MicroStrategy has bought $4.5 billion worth of Bitcoin this week, and with names like that, and there are some other names who are trying to be mini MicroStrategies, like a Semler. There's just seems to be such significant demand that 100,000 seems to be within reach. Famous last words, right? If it never hits 100,000 or doesn't hit it for a long time, they're gonna be like that fool on on Global Money Talk said it. But it feels like it's gonna go through. It could go through as early as perhaps today, given the impulsiveness of this rally. And one of the things that Sean said yesterday was the new this current administration. He said they don't talk about it very much, but really they have their foot on the neck of Bitcoin. They've gone around to a lot of major banks and financial institutions and says, we don't want you to lend to crypto. And if you're a major institution, you we get it, we don't want to make enemies with the government. It's not usually a good enemy to make. And that goes away likely with the new administration. They're crypto cheerleaders. So the viewpoint is it's quite positive, and a big reason is the government won't be holding it down, is the view.
Yeah, and where we're fast approaching that 100,000 level, I don't think it's a stretch to start eyeing that level, especially given some of the options levels that we have been seeing as we head into the rest of this month. But I do want to do a quick market check because we've been seeing a lot of fluctuation with the major equity averages this morning. So we saw futures higher this morning. Right now we are seeing the Dow Jones Industrial Average trend higher. So we've been seeing a lot of volatility this morning. We saw the Dow lower after the open, but right now we're up by 0.8% over 300 points this morning. And when we're looking across the major equity averages, the NASDAQ is lower right now, pulling back by about 80 points or 0.4%, while we're seeing the S&P 500 try to eke out a gain and reclaim that 6,000 level. I do want to mention in terms of Dow movers today, we are seeing Salesforce and IBM lead the way higher. So a lot of interesting price action, but I know you wanted to cover this morning's economic data release, which was weekly jobless claims. We saw it hit its lowest in about 7 months. So what's going on there?
So weekly claims surprised on the downside once again. And this was for last week, which includes the 12th, it's the survey week for payroll. So this suggests that we're going to get another strong set of payrolls come the December, the first week in December. I forget exactly what day, but the first Friday in December, going to be another strong payrolls report, which will factor into what the Fed is thinking for the mid-December monetary policy meeting. The thing I would notice is continuing claims have continued to rise, and I think this is the fourth consecutive rise we've seen, which seems to suggest that there are not a lot of people losing jobs right now, but the people who have lost jobs may have trouble finding them. So that's why continuing claims have climbed a little bit higher, and you never like to see that as we go into the holiday season. But nevertheless, I think it is going to be a fairly strong payrolls report. We had also existing home sales today, a little bit higher, but overall the level remains depressed with supply low, prices high, and mortgage rates not far from 7% and above 7% in many cases. So that looks like that market will remain relatively subdued, likely certainly until December. And I don't know how many people are buying houses, selling or buying houses in the middle of Christmas season. So I'd expect that market to remain subdued till probably at least January. If people put, then if rates are a little bit lower and mortgage rates therefore come down, there may be a few folks who are saying, you know what, we want this house, and we're just going to pull the trigger. But expect that to remain subdued for the next couple of months. Philly Fed report also today, a little bit mixed. The headline was lower, but some of the stuff underneath would actually seem to be quite strong. So, unclear what really to make of that, but certainly the implications for the employment report today, I think, are significant.
Yeah, and I'm glad you brought that up because our next jobs report will be coming out December 6th on a Friday, and we have the Fed meeting for the month of December, two-day meeting taking place between the 17th to the 18th of December with the rate decision as well as economic projections coming out on the 18th. And in between the jobs report and that Fed rate announcement, we also get inflation figures as well as retail sales. So more data for the Fed to actually look at. But what are we seeing in terms of expectations for a rate cut right now?
So before Powell's comment, it was pretty 80 to 20 for a cut in December. He comes out and comments, and the market goes, oh, maybe not. So I saw it as tight last night as 52.48, and I'm like, oh my goodness, is this the election all over again? I just got through that. I don't need anything that close. So this morning it's 55.45, and it looks like it will fluctuate where there is significant uncertainty. Now when we see the PCE report next week, and then we'll see the employment report, I think things will become a little more clear. I did note that Lisa Cook, who's one of the new governors of the Federal Reserve, and with these new governors, sometimes you just don't really have a sense of who they are. She sounded like a centrist, so I'll just quote the little bit of what her speech was. She's going forward, I still see the direction of the appropriate policy rate path to be downward, but the magnitude and timing of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. She also actually noted that American productivity has been very, very strong compared to the rest of the G7 over the past several years since the back end of the pandemic. So that's been able to at least keep growth high and inflation subdued more than some of our partners in Europe have seen. But she seems like very centrist. Rates are going lower, but we're not so sure of the pace. So this December meeting, we still have another month, but this December meeting could potentially come down to the wire, and then we'll have to see what the Wall Street Journal, Mr. Tim Reyes, has to say. I just am not sure that the Fed wants to be that unclear as we go in, but we still have time.
And I do want to focus on what's happening in the U.S., but since you mentioned Europe, and we are seeing rising geopolitical tensions in that region, and we're seeing oil prices higher this morning as well, can you give us an understanding of some of your concerns, not just from an economic, fundamental, macro perspective for the Eurozone, but also when it comes to geopolitics?
So I think we said at the last time we spoke that the problems in Europe are not priced in. Any more problems in Middle East aren't priced, but Europe, isn't priced in. But I think there's a little bit of deep concern. I don't know if I would call it panic in Europe, in Brussels, because with Trump getting elected, he's a wild card. You don't know where he will stand, and just some indications over the past couple of days. I think Norway, and I wrote it down here, I think Norway and Sweden have sent out pamphlets warning their citizens what to do in a time of war. I don't follow it that closely. Maybe this is not, I can't imagine that it's common. It may not be entirely uncommon, but Western Europe has seen peace for 70 years, and I think they're a little spoiled. So this, I think, was waking people up. Also, articles coming out that Germany is making preparations, and certainly, Germany and anybody who's that close to what was the Warsaw Pact should have these plans, but there's a focus on their plans of how many reservists they'd have to mobilize and how they will have to move tanks and troops if something were to happen. I think that there's a recognition now more than even recently with the escalations where the Ukrainians are now allowed to use U.S. and European weapons that hit deeply into Russia, and Russia has launched a ballistic missile, rattle its saber, changing their nuclear doctrine. It's made the idea of a real conflict on NATO soil unlikely, but not as distant of possibilities it formerly was. So, a couple things to think about here. And let's take a look at graphic one, because I went back to give us an idea of when this is the markets after the invasion of Ukraine on February 24th, 2022. So I looked at on the far left column where certain markets were the day before, where they were 1 week after, and where they were 1 month after. So there's a lot of data on this chart, but I would point to the fact that things that moved dramatically were Brent oil, moved 20% in the first week, and then 25% after a month higher. Actually, a lot of the most exaggerated moves happened between 1 week and 1 month. So I think the Brent must have gone up probably 30 to 35% somewhere between 1 week and 1 month. But certainly Brent, the dollar overall was quite strong. The dollar index overall 2.5% higher. Dollar yen, I guess in part due to the susceptibility of the Japanese economy on external energy, was up 5% after a month's time. And I can't remember exactly why the U.S. stocks rallied so much and yields backed up so much in that period. There may be a different story there, but certainly if there's a conflict, I think you buy the dollar and you buy crude. Gold went up, but only a couple of percent. And Bitcoin actually rallied significantly, 15%. But again, I don't know if there's a backstory there. But gold and Bitcoin may be good, but more risky buys. But Brent oil and the U.S. dollar certainly. So other things that are, I guess one of the biggest questions is, can Trump withdraw from NATO? Because he certainly threatened it. And one of his, I guess, drawbacks you could say is he's extremely transactional, and he said to people in Europe, whether it was a negotiating ploy or whether it's just typical sort of Queens New York bluster, if you don't pay, we're not going to protect you. And Russia can do whatever the heck they want, which is kind of a terrible thing to say. And the best comment after that was, NATO is not a protection racket. It shouldn't be. But one thing that his bluster did push a lot of European nations, which were probably down about 1% of their GDP spent on defense, they're practically all above 2% now. And it wouldn't surprise me if Trump would say, you know what, we'll be here to protect you, but you guys got to pony up 3% now, which is probably honestly not a bad idea when you think you'll have sort of peace forever and everything's going to be like Western Europe. Now you have Russia in a threatening way, using North Korean troops with the backing of China. All of a sudden, if the Americans aren't there, you realize, do we have the wherewithal to fight a real conflict if Russia were to invade? And the answer is probably no. Now, to the question of whether Trump can unilaterally withdraw from NATO, the answer is no. There's the Defense Authorization Act of 2024, as a matter of fact, was a bipartisan act sponsored by Senator Tim Kaine of Virginia and Marco Rubio of Florida, who will now be Secretary of State in due course, that said it would take either 2/3 of the Senate or an act of Congress to withdraw from a treaty. So that is unlikely to happen. Nevertheless, if the President of the United States drags his feet and says, I don't really want to commit troops to NATO, I want to draw down troops, he is, after all, the Commander-in-Chief, and that would be a real sign of weakness. So I think the question is, we'll see in 2025, Trump has a chance to be either Churchill or Chamberlain in 1938? Does he let, if he forces a peace treaty, does he let Putin hold on to the territory that he's gained in Ukraine and say that'll satisfy him? That's exactly what Chamberlain said, and the world came to regret that. It's one of the biggest risks of the new Trump administration. You hope that he listens to some of his better advisors and says, Western Europe has an economy 10 or 20 times the size of Russia. Certainly, they have a lot more resources they can throw in as long as they're willing. But I think it'll be the first really important foreign policy test for the new incoming Trump administration, and it has tremendous impact worldwide, of impact in the Middle East, of a lot of impact in Asia, where China is watching to see are the Americans really withdrawing into a period of isolationism, and it'll give us a freer hand. So if this were to happen, we just showed the graphic, you buy dollars and you buy oil, at least in the short term for trade. But certainly we hope that it's Churchill and not Chamberlain.
And you're able to cover so much ground there, and as you mentioned, there's so many ramifications when it comes to diplomacy and what it means for not just Europe in terms of what the Trump administration does, but also for the rest of the world here. And I'm glad you brought up that graphic, because when you're looking at some of the levels for those assets, a lot of them, particularly when we're looking at gold or Bitcoin or even the major U.S. stock averages. I know this was over 1,000 days ago since you mentioned the first week as well as first month since after the Ukraine invasion, but it has been over 1,000 days at this point, and it really makes you see how far we have come.
Especially with crypto, 37,000 up to 42,000. I mean, actually, it wasn't all that long ago. I did that because perhaps I've gotten to the age where I can't exactly remember what exactly happened on certain days, and I just have to go back and look for it. But just an idea. So in crypto, at 100 Bitcoin, I should say, at 100,000, very different than at 40,000. How it will react. People say that history never repeats itself, but it echoes. So I think with a problem in Europe, buying the dollar and buying oil seems to make a lot of sense. Typically, Swiss is a safe haven, but a little less so, because Switzerland, after all, is in the middle of Europe. And what happens around Europe will affect it. And yen, typically a safe haven, but with Japan's dependence on foreign sources of energy, that probably makes Japan a little, in that specific case, less of an attractive safe haven.
Yes, and I do want to take a look at what is expected to come down the pike when it comes to the Trump administration. So we heard about the Secretary of Commerce, who that would be, and there's still questions swirling around the Treasury Secretary here. So given the different names out there, what is your perspective on all of this?
So it was interesting that I guess Howard Lutnick was really, the head of CEO of Cantor was really lobbying for the Treasury job. And I think he lost. He didn't get it. Commerce is an important seat, but it is not Treasury. Treasury is a much bigger seat. I mean, I think Treasury is probably just behind Defense and State in terms of succession to the presidency. If all hell were to break loose and awful things happen. But Lutnick got a wider purview on trade and different things. I think is a little bit of a sop to him and all the support that he's given to Trump. Trump is a loyalty guy, so Lutnick didn't get Treasury. So we're looking at now, and really, unless you're really deep into Trump's inner circle, and if the people who aren't really talking, which is pretty interesting, because usually the Republican Party has been legendary for leaks. So the people who are left in the mix is certainly Scott Bessent, the former head trader at Soros and a big backer of Trump. Kevin Warsh, a former Fed governor and maybe future Fed chief if he's not Treasury Secretary. Recently, a name that's gotten into the mix is Mark Rowan, who's head of Apollo Global Management. So now, if I don't think President Trump listens to me, but I really strongly feel that Bessent is the best person for the job, simply because as Treasury Secretary, you need to know when there's a crisis, what happens, what to do, how to plug the wounds. Bessent has been front and center for a generation on those. I think superbly well superbly well trained and situated to be Treasury Secretary. Where Warsh has been a Fed governor, he has great relationships. He those relationships will make navigating any crisis easier. So I think he would be a pretty good choice. While Rowan, he's a Apollo is private equity.
Yeah.
So he knows this. He certainly knows the finance space, but I don't know if he's been in the chair when really, really big bad things happen. And I think that makes a difference because I think we saw that actually in the global financial crisis when Hank Paulson was there.
Yeah.
Now Hank Paulson, co-CEO of Goldman Sachs, brilliant, brilliant man. But I seem to think that in retrospect, he should have bailed out Lehman because that would have changed the arc of the financial crisis. But you have to remember that Hank Paulson was a banker. He wasn't a trader. And as a counterfactual, I wonder if his co-CEO, who was John Corzine, senator from New Jersey, actually came up from trading. And if he would have realized that if we don't bail out Lehman, the what follows will be very, very difficult. And it was as it turned out. So I really feel very strongly that you want someone in the chair that knows what to do when something goes wrong. Doesn't always go wrong, but it can. So I'm hoping it's percent. I think the slate is fine. There's nobody there's no sort of equivalent Matt Gaetz for Treasury Secretary, for which I think this floor and everybody else in our business is really happy. So that's where we stand. We don't know when it will come. It's taken a long time.
And wrapping up our discussion today, I do want to take a quick look at the Department of Justice and Google. So when we think about Google, we might think about the parent company and also think about search, right? So give me an idea of why you think this move from the DOJ, this suggestion or this expectations that they should sell off Chrome. How does that make sense?
So they were found guilty earlier of antitrust violations in federal court, and one of the suggestions that the DOJ is making to the judge is to proposing remedies. One of the remedies being proposed is that Google is forced to sell off their browser, Chrome, which is sort of ubiquitous on anybody who has a PC who's not using a Mac. It's a big deal, not because Chrome itself is so valuable. Somebody said, I think yesterday, that it may be worth $20 billion to somebody, but who's going to buy just a browser? And there's suggestions that maybe OpenAI will buy it because they can use that for people to plug into their AI capabilities in ChatGPT. But that is tremendously valuable to Google because it directs everything in search where they gain such a tremendous amount of revenue. So it's much more valuable to them than it is to any buyer. So the question is, if you're forced to sell it, who would you sell it to? Will you get a decent price for it? And we are years and years away from Google having perhaps to sell that. It will certainly be appealed if that's what the judge rules. The judge may rule certain other things and not selling off pieces of the business. And probably appeals through to the Supreme Court. So several years, probably well into the Trump administration, if not beyond, before that happens. But what's interesting for me is this suggestion that it's happening and that the Trump administration may let it play out. For many years, and for much of when I was growing up, the Republican Party and corporate America worked hand in hand. It was sort of, corporate America wanted lower taxes, less regulation, and the Republican Party was a party of free trade and less regulation and lower taxes. It worked great. In the aftermath of the financial crisis, I think what corporate America did, and we saw it particularly with Disney, is it became highly involved in politics, and in ways that the Republican Party didn't like. I just remember one famous one was the transgender bathroom ban in North Carolina. Yeah. Right? People said, we're going to not do whole events in North Carolina, we're not going to do things in Charlotte, and North Carolina backtracked. In Georgia, after the election, they pulled the All-Star game because they didn't like the changes to voter registration, which were actually quite modest. So at the end, corporate America, for a number of reasons, part of it was fear of losing customers, decided that they wanted to side with sort of more with the left, with more of the progressives. And in the end, over that decade, they kind of lost the populist part of the Republican Party. And that's the part that's running the party right now. So I think what the Mag 7 and what big tech especially will find that they don't have a lot of friends. The Democratic Party, run by the far left progressives, are not their friends, even though generally they seem to be friendlier in terms of how they cover the markets. But now you've lost what used to be your friends, so you're a little bit wandering in the wilderness. And I think that will play out in interesting ways in terms of who's running the FTC, in terms of populism, in terms of breaking antitrust over the next few years. But corporate America, I think, is looking around and has looked around and realized that, wait, we don't have any friends, so maybe we ought to back off politics. And I think that may be the best outcome for them is stick to business, you're good at it, you're terrible at politics, don't get involved.
Yes, there's so many layers beyond just the headlines here, and we are seeing shares, Class A shares in Alphabet down about 6% on the session today. But Tai, we have to wrap it up for today, so thank you so much for weighing in on all the stories making headlines today.
Good to be here.
Thank you, Tai. And that will do it for Global Money Talk, live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sempro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. We'll be back bright and early tomorrow morning. Have a great day.